Hi, this is Pro Sam with this episode of Living and Working Abroad show. Thanks for tuning in on YouTube and other social media channels, including Facebook, Twitter, X and LinkedIn. It's a quick talk today about what do expats need for a non-resident capital gains tax return in the UK. If you're a UK domiciled resident or you own capital assets in the UK, especially now we're talking about property, commercial property or residential property, but it also apply to shares in the UK or other fixed assets in the UK. When you sell those, you've got a capital gain and you've got a return to do. The capital gains tax return is due within 60 days of the completion. So what information do expats need and why? You need the address of the property. Obviously in the UK they use a postcode to identify the property, and that's relevant as well, not just the address. You need to know the day you acquired the property and the date you sold it. Now this is of essence to the whole thing, because the changes to the capital gains tax laws over the last 20 years, over the last Labour and Conservative governments have made a number of different changes to affect the tax and the capital gains charges on property in the UK. Both Labour and Conservatives have made those changes. Those changes date back as recently as 2022, but they started way back in 2006, and they could change a lot. Whichever government's coming into power in the UK in the next year will have a significant impact on how these capital gains liabilities will arise. So when you purchase a property, it's relevant because there are a couple of different rules you could use if you've owned it for a very long time. The date the exchange contract when you're selling it or disposing of the property, the date that you stop being the owner, what is the completion date of the transfer. So UK conveyances can take some time. If you're just gifting it within a family, it can be a shorter transaction in the land registry. So what was the date and what was the value when you acquired it? Now actually with a residential property, there's revaluations to April 2015 or 2019, depending upon the rules and the variations. The changes are quite complex depending upon what your circumstances are. What is the property type? So if it's residential or is it commercial has a very, very real impact on the deal. So if it's commercial, it's a different capital gains tax rate at 10 or 20%. If it's residential, it's 18 or 28%. So it's a higher capital gains tax liability if it's residential property. If it's mixed use, it's still likely to be put to a commercial rate. If you're selling it through a business, you can get you can pay the profit through the company as a corporation tax. That might be 19 or 25%. So that the rate that you're going to pay on this property disposal is quite significant, and it depends upon the type of property. And again, there's great potential in the next 2024-25 for those rates to be increased. If you're renting the property, you've got taxable income coming in. So even if you're an expat living and working abroad, you've got rental income coming in. That rental income, that property rental income is fixed in the UK and therefore is chargeable to a UK tax return. What is your tax rate in the UK for the relevant year? So you need to have in mind that capital gains tax has two rates. So for residential property, it's 18 or 28%. Other types of capital gain, 10 or 20. The higher rate capital gains applies if you're a higher rate taxpayer. So if your overall tax liability, you're earning more than 50,000 income in the UK from the combined sources of income, then you've got the higher rate of capital gains tax to pay when you make your disposal. The valuation date can vary, as I say, between the start of the tax year 2015-2019, depending upon the rules that we need to use at the time. And when you were last tax resident in the UK has a bearing as well. So for expats that have left the UK in the last 7 years, they can still use capital gains rules to defer the payment of the capital gains liability. So an expat that if you sell property, the HMRC give you a reasonable 9 months or so to sell the property, even though you vacated it. Even if you rented it, possibly for that 6 months of those, they give you 9 months to dispose of the property and still offer you the personal residence relief. Personal residence relief is lost if you're renting the property or if you've lived abroad for a long time. So if you've lived in the UK within the last 7 years and you dispose of the property, you still can potentially claim private residence relief on that property. So a minefield of an area. There'll be lots of changes in 24 and 25 as the new governments and the new brooms come in to amend the way that the taxes are paid. Capital gains tax rates could go up further. Will they go up to the inheritance tax rate of 40%? Will the inheritance tax rate come down to be matched and lined up with a flat rate, 33% capital gains tax or inheritance tax? We don't know. But if you're an expat with UK property or capital gains disposal, first thing is you need to do a return now within 60 days of that disposal. And once that's done, at the end of that tax year, which is next April, you then need to complete and report the capital gains disposal in the full return. But the capital gains is already payable after that first return. So you do the disposal, make the capital gains tax return within 60 days, pay any tax within 90 days, and then the tax return at the end of the tax year in the next April. Lots of rules and adjustments to save money and save the potential liability that you've got, or even acquire a tax saving liability. You can defer the payment of the capital gains while you remain an expat for more than 5 years. For more information and guidance on capital gains on UK property disposals and tax planning for UK property acquisition and rental in the long term, contact us at privatepartnership.com.